Tuesday, March 30th, 2021, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at how we've had 50 years of massive inflation and very few people know about it. Yes, there's the old quote attributed to Lenin that the best way to destroy the bourgeoisie or the middle class is to debauch the currency through the process of inflation, and that only one person in a million knows that it's happening. And the worst of this inflation that we've had is that it's been done to the world's reserve currency. Of course, a lot of countries have had massive hyperinflations in the last 50 years, mainly because they're not part of the club. They're third world or emerging market countries, and the people who run the system, they don't care about those countries because they keep lending to them through the IMF so that they can go there and extract wealth from the general public from those countries like Brazil, Argentina, and many others. But the same thing's going to happen in Western Europe, in the US. That's what they're doing now. They're indebting us up to here, and eventually they'll pull the plug. There'll be a massive collapse of everything, of the currency included, because it's not possible. Fiat currencies, they always go to zero, and the paper dollar will do the same. So I'm gonna talk a little bit about that today, even though I've already talked about it. And I'm going to look at some headlines, some stories today as well, and give you my opinion on them. Billy is back. Yes, the golf was nice yesterday. It was a beautiful day. My game was a little bit mixed. I played some good holes, but my driving and my putting weren't great. And if you don't putt and drive well, you're not going to score too well. But I'm not going to beat myself up. I hadn't played in 3 months. So, yes, let's go to one of my favorite quotes here from one of my favorite economists, bankers, if you can say that, Felix Sommery. He was an Austrian-Swiss banker in the beginning of the 1900s. He wrote his memoirs called The Raven of Zurich. And in that book, and I'll put a link to that book in the description below. It's a free PDF. I highly recommend it. And he says, inflation, on the other hand, can go on for years without its victims becoming conscious of the incredible way in which they have been swindled. I think since Nixon closed the gold window in 1971, because that's when the inflation started, August 15th, 1971, he said he was temporarily suspending the convertibility of the dollar into a fixed weight of gold, a fixed number of dollars for a fixed weight of gold. That's what the Bretton Woods gold exchange system was. It wasn't a pure gold standard because it was only the dollar that was linked to gold, and the other fiat currencies were linked to gold by being having a fixed exchange rate versus the dollar. So they're indirectly related to gold. So why did Nixon default? That was a default. No one ever says that was a default. Because it's not politically correct. The mainstream media calls it, if they ever talk about that, they call it Nixon closed the gold window. Well, because the United States abused that system, they started creating liabilities or printing dollars out of thin air. And the people that were in that system, mainly the biggest European nations, their treasuries, they knew that was happening, and they were demanding the gold, and the US was running out of gold. There were a few things they could have done to stop that. They could have raised interest rates, but presidents never like to raise interest rates. They could have reset the price of the dollar to gold, paper dollar, from $35 an ounce, maybe to 50. That would have stopped the flow of gold out of the U.S. And the third nuclear option, which they chose, unfortunately, was to basically close the gold window and make the dollar just nothing, really, an IOU nothing, like John Exter calls it. And why have we had inflation since then? Well, because inflation is when you create currency out of thin air, not backed by a fixed weight of gold or silver, and there's no anchor. So central banks, governments, they can just expend the money supply. They can go on a debt spree. Yes, granted, the system had a lot of problems in the ensuing 9-10 years. The paper dollar almost collapsed. Volcker had to come in and save the system. But they've learned through time. They've learned through what's called management of perception economics, a lot of propaganda about the dollar, how it's as good as gold. They even call it as good as gold, or the king dollar. And yes, the dollar has had ups and downs versus all other fiat currencies. And it's generally actually gone down quite a bit versus the major fiat currencies. Like if you extrapolate the euro back, the Deutschmark, you can still calculate where the Deutschmark is. If you look at the Swiss franc, the dollar has been on a downward spiral versus the major currencies ever since. And we're still told that the dollar is king, but not even the other fiat currencies are king, because they are a derivative of the dollar. So yes, we've had massive inflation, and in a fiat currency system, the flip side of the currency is the national debt. That's what the currency is basically backed by. So that's why when politicians talk about paying off the national debt in a fiat currency system, you should know that they're basically not being really honest with you, because if you pay off the national debt in a fiat currency system, you get rid of all the money. And that's why, if you look at the national debt of the United States back in 1971, it was $398 billion. That's the national debt. That's not the deficit. Today, I think they run that every month as a deficit, $398 billion. It's crazy, isn't it? And now the national debt is over $28 trillion. But it's not only the government that has indebted itself, it's the general public, it's corporations, it's local government. And unfortunately, disinflation can't go on forever. There will be a tipping point where this system implodes completely, and all the prices that we see of especially paper assets, stocks, bonds, real estate, that's gonna completely evaporate, and we will see everything change. This so-called prosperity of the last 50 years, it's going to be uncovered, that people are going to see that there's nothing behind it, and people who are able to protect themselves with some precious metals, they're going to end up doing okay. They're not going to be wiped out. But a lot of people that think they're wealthy, a lot of people that have a lot of leverage, they're going to be wiped out. When that will happen, I don't know, but it's not sustainable, this system. So with that, let's look at some stories that I think are just symptoms of this inflation. And the other thing that's happened in the last 30 years or 20 years or so is that the central bankers and governments are desperate to keep this system going. So they've manipulated, they've killed capitalism. They've killed the price of money. And by that, I mean they've manipulated interest rates lower. And what that has done, that's forced the financial system, speculators, investors, consumers to leverage even more, because they're not getting returns on their savings. And with the leverage, of course, they've also used the leverage to manipulate everything. And you get a lot of accidents. We've had so many financial accidents in the last 25 years, starting with, let's say, Orange County, California. They went bust because of derivatives. LTCM went bust because of derivatives. Dot-com bubble, not so many derivatives, but look at the '08 crisis. That was the subprime derivative crisis that almost brought down the whole banking system. And recently we've had this Archegos. It's a hedge fund and or a family office, if you want to call it. So it says here, Archegos banks discuss cooperation to head off selling frenzy. So what was the problem here? It's derivatives and leverage again. They were doing what's called CFDs, which is basically betting on stocks, but on a derivative basis. They don't even own or sell the stock short. It's just betting on it with leverage. And as usual, it backfired. So that's another symptom of this system that we've had. So let's go quickly through this story here. It says the biggest counterparties of Bill Huang's Archegos Capital last week discussed ways to limit the market fallout from his collapsing bets. So you see, it's all bets, it's not investments, on stocks including Viacom, CBS, according to 4 people briefed on the talks. But the effort founded and paved the way for days of chaotic trading. So here's what they're doing basically. The banks had each allowed Archegos to take on billions of dollars of exposure. You see, in the sound money system where interest rates are relatively normal, maybe 5 to 7%, there wouldn't be all these billions to lend out, easy money, right? So exposure to volatile equities through swaps contracts. So these are the contracts for differences, CFDs. I would say this is like an OTC, how can I say, ETF for a big fund. So ETFs are dangerous as well. They're derivatives. A lot of them are leveraged. I'd stay out of ETFs, especially precious metals ETFs. So that's a story there. I saw a story a couple of days ago about how UK housing, mortgage lending, has been the highest since before the '08 crisis, with the exception of a month in 2016 where they had a blip up. So does that make sense that we've had the worst economic collapse in 300 years and housing is booming? Well, that's part of all this fiat currency inflation, right? Speculation. They want the public to take on a lot of debt. People need to really be careful. It's not going to end well, this bubble. They're building another housing bubble. Yes, they've exempted some houses or up to some certain value from the stamp duty. That has helped. But also all the QE, the Bank of England is doing, rates virtually at zero. That's fueling this as well. And people are being fooled into thinking that everything is fine and is going to be fine when we go back to normal. If we go back to normal, yes, there will be some pent up demand that's going to flow into the economy. But it's not based on real wealth and prosperity, I would say, even though a lot of people have been able to save quite a bit of money because they haven't had as many expenses because they've been stuck in the house. But I would say that's a small part of the general public. Most people, a lot of people are struggling to get by. And if they had so much savings, they wouldn't be taking as much debt to buy houses, right? The other one is more political. And it's been found, and this is another one of these hedge funds or capital management, they call them, a Greensill capital management investment firm. That's gone bust or is under a lot of trouble. It's kind of collapsed, really. And we now find out that the former Prime Minister, David Cameron, was involved, and he was pushing the UK government during lockdown last year to use this fund for they were involved in a payment scheme to make it easier for the supply chain payments to work out. And yes, he pushed the UK government, basically using his influence. In other countries, they would call this corruption, but in the UK, they never use that term. They call it lobbying. So he was going to make out like a bandit if this had worked, if Greensill hadn't collapsed. I even think they have a bank in Germany that collapsed. My wife said she read somewhere that he was going to make like 70 million pounds if this had gone well. He was employed by this Greensill Capital. And now it's coming out that yesterday's story came out. Cameron faces probe in links with Greensill at heart of government. British Standards Committee to look at former PM's lobbying efforts for financier. Well, my question is, why not like arrest David Cameron and prosecute him, try him for corruption, and if he's found guilty, put him in prison? This standards committee is just a whitewash. It's going to take years. Taxpayers are going to fund it, millions of pounds, and he's going to be given a slap on the hand, and that's it. It's really amazing. In the UK, they like to report about how countries maybe like Russia and Brazil or other countries in the third world are corrupt. But here, there is no corruption. There is lobbying, right? I don't know if any of you know the story of Tony Blair. Once he left office, he went to work for JP Morgan in London, and he probably still does. I'm not sure, but he was making £2 million a year. And we heard from our clients, some of them were at JP Morgan, some of them, or some of our colleagues who had clients that had contact with JP Morgan, that Tony Blair, what this job entailed was him going to the office a few times a month and then sitting in his plush office and juniors coming in and ask him if he wanted a cup of tea, and they'd make his tea. So he was making £2 million for sitting in JP Morgan's office. No, that was lobbying and consultancy, right? That wasn't bribery or corruption. So there you go. With that, let's quickly look at where the markets are this morning. It's 8:37 a.m. Yes, gold. The paper price of gold is continuing to get hit. Yes, I've seen that the 10-year yield has spiked quite a bit. It was below 160 on Friday, and right now we are at 176. But remember that 2 or 3 weeks ago, we were at 175 and we dropped all the way back to almost 150 or 160. And gold didn't do anything. So now they're saying, I can bet they're saying it on the mainstream business news that gold is coming down because yields are rising. But anyway, so right now we are testing 1,700. Down $12. And I saw yesterday when I came back from playing golf that there was quite a big collapse in the gold price around 9:30 New York time, which was just on the open of the stock market. It just fell out of bed. I'm sure the CFTC is not going to look into that. So yeah, we're right near the lows here, 16.99. The high is 17.16. I'm patient. I've been at this for many years. I know what money is. I know that holding fiat, we're financing this corrupt system. So I'm hanging on. I'm not concerned. I'm going to try to keep stacking more gold and silver. That's what I'm going to do. That's the only way to defeat them. Silver is down 15 cents at 24.47. High's been 24.75, low 24.47. Stock market, despite higher rates, made an all-time high yesterday. I think the Dow in confetti or Federal Reserve notes. Right now it's up 66. Doesn't really matter. The Dow futures, the NASDAQ is down 61. S&P is unchanged. So currencies are basically pretty steady. The pound is unchanged, 137.58. The euro's down slightly, 117.39. The dollar is fairly strong against the yen. We're above 110 at 110.20, up a third. Dollar is unchanged versus the yuan at 6.58. High-grade copper down just under percent, just above $4. WTI crude 61.50, so fairly strong. And 10-year yield, of course, right near the highs of the year at 176. It's all very crazy, I think, the whole financial system, monetary system, the economy. It's really hard to understand anything. And why is that? Well, because we've had 50 years of this crazy inflation, government interference, bailouts, manipulation, and I want to stay out of it as much as possible and hold on to my physical gold and silver. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Facebook, Twitter, and all these other platforms below here. I wish you all a great day. Take care. Bye.